following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' music means it's time once again for the old Option Block, your bi-weekly source of options, wit, and wisdom, punctuated by moments of sheer insanity. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I am joined on the old all-star panel today by two of our returning favorites, starting off with the man from the pit, the master of all things lobster-related, one Andrew Giovinazzi of Option Pit fame. Andrew, welcome back to the show, sir.
Thank you. I just I had to scold a couple of my pet lobsters, but I am back and ready to talk options now.
How does one scold a lobster? Do you have to yell through the tank? It must the words instead
Bad
of
lobster.
Bad lobster.
No, actually, what you do is you grab the lobster right, behind the head, and you point it at the boiling water and said, "One more false move, and in you go, buddy." It's a little cruel.
There you go.
It's a little cruel.
Just keep the pot boiling 24/7 next to the tank, just to let them know who's boss.
Exactly.
Any day that could be you.
One step and it's just, exactly, one tank of water to the next, baby.
And then also joining us, listeners.
Yes, lobster wrangling, very tough.
And listeners may also recognize that other voice that chimed in there, one Uncle Mike Tusaw from Know Your Options Inc., beaming into us from the scenic St. Charles, Illinois office. Uncle Mike, welcome back to the show, sir.
Always a pleasure to be here.
Glad that you're so enthused for the old Option Block. And I realized as we were about to record the show that maybe we should mix up the intro a little bit. And I'm always plugging our forum in the show and mentioning our voicemail line and things like that at the end of the show. But people like to reach out to us via Twitter as well. So I thought I would mention those again here at the top of the show. So if you'd like to reach out to us and be included on our listener mail segment, then by all means, shoot us a question. You can reach out to us here at twitter.com/options. That's our Options Insider main account where you can ask us any questions you want about anything options related. You can DM us and send over your queries, and if they're interesting, we'll read them off and answer them on the air. But of course, you guys also have Twitter handles, so if you want to reach out to my fellow co-hosts here on the old All-Star panel, Uncle Mike, what is your Twitter handle for the folks at home?
No KNOW options.
All right. And Mr. Lobster, I'm assuming that twitter.com/lobster was taken. So what are you guys running with these days?
I'm kind of like optionlobster.com was taken.
That's a good one. You should grab that right now before this show airs, sir. You have about 24 hours to claim that Twitter account and URL, lest I shall claim it for you.
Because God knows there can't be anybody with optionlobster.com. Or we are at Option Pit and we are at Option Vol for all things we do. We do put out a nightly blog, which is actually pretty good reading. And it's a collection of the day's events. So, yes, that is our Twitter handles.
Always good to be a fan of your own blog.
On Twitter.
Always good to appreciate your own
work.
Well,
they're pretty good. Yes, they're pretty good. I could say they would stink, but they don't stink.
All right, and with the Twitter block over, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss what's moving the old markets, what's been trading, what's been lighting up the old tapes today. And it was a sea of green for the most part in most of the major indices today. The S&P is up about 0.7%, or a little over 9 handles, to about 1,400 even almost, or 1,399.98. And the Dow up nearly 1% to 13,204. The Nasdaq up about 0.7% as well to 3,050, and the good old VIX cash heading down yet again, down about 0.5 point, or maybe down about 0.5 point to about 16.24 on the day. All right, and aside from the major indices, of course, the big story of the past few days, of the past few weeks, really, hell of the past year, has been that little old fruit company in Cupertino. So, Uncle Mike, it's been quite a wild ride from an Apple perspective. I know when you were on the show last week, you were thinking that maybe your long love affair with the fruit machine has finally come to an end. Stock, of course, got beaten down quite a bit, down about close to 80 handles, down to about 560 roughly, or about 570. And so he was looking pretty grim for a while there, then post earnings right off to the upside again. So first off, were you desperately rolling puts, giving all that beat down Apple took last week, or what was the process going into and coming out of earnings?
Basically, it was me never leaving my screen from 8:30 a.m. to 3 p.m. for about a week straight. And it was difficult to walk away to go to the BBI was definitely hindered.
Wow, a BBI of 0. That's impressive, sir.
Yeah, I haven't peed in like 2 weeks. It's something else.
I thought you looked a little yellow on the Skype call there. I couldn't tell why.
But yeah, it's one where I actually I had to get a little bit unique going into an earnings announcement like this. I hedged in a way with which I have never hedged before, and we're going to talk about that in the strategy block.
Whoa, a tease. Uncle Mike,
yes.
setting it up for our listeners coming down the pike.
Yes.
Well, this kind of had this reminded me a little bit of what we saw going on, a little bit of, the old heady days of the late 90s when names like Microsoft were still high flyers, and they would routinely talk down their earnings going into the announcement and then routinely blow the doors off of them. And of course, all the talk going into Apple's numbers was that, iPhone sales are going to be down. Somehow that news had amazingly leaked, and yet coming out, of course, they blew the doors off of it again. So they're just setting him up to knock him down yet again. It's amazing that old trick still works.
Well, yeah, it's one where, this has been, and I'm at a stage now just with the stock itself, kind of where I was last fall, in that it's not going to go up forever. And I'm sticking with it for now just because the beauty of hedging, you're able to do these things. And, it's not going to go up forever, folks. The thing that I keep looking at that I think is a big barrier for it is that around the 644 level, when a couple weeks ago it got to that level, it became a $600 billion market cap company. And the last company that was ever at that point was Microsoft back in its heyday. And when you get to that level, it was, even though it was a stock that was making all-time highs, it found a way to find resistance. And I think that's going to be the next barrier that I want to see Apple cross. The fact that we've been long right now forever on Apple, we're going to stay in it for a while, and we are hedged at the 560 level still as of right now. But if I were flat right now, I'd stay out of it until it could get a good strong breaking of the 644 level or around that area.
Yeah, I was thinking about you last week when I was watching it dance with that 560 level. I said, I think Uncle Mike is hedged right at about that level, so he's got to be having a fun week. And the BBI should reflect that commensurately, I believe.
It was a happy ending. Now, Grant, I'm gonna need to ask you for a kidney, Mark or Andrew, but it worked out for the best, thankfully.
Of course, there are some other companies, believe it or not, in the old market, and a few of them actually are reporting after the bell tonight. We're awaiting Andrew's favorite buy premium and do stuff name, good old Zynga. Trade coming out after the close. They closed today at $9.42. Looking like some of my downside positions in Zynga are looking pretty good, given, of course, it hasn't reported yet. It's hovering at the same level in the after hours, and then, of course, we have good old AMZN, of course, Amazon, also coming out after the bell today, both of which appear to not yet have announced because they're both hovering around where they closed. Amazon closed at 196 as well, so we'll be keeping an eye on those.
Zynga actually Zynga just reported 12 cents a share loss. They're zung.
They're zung. Well, yeah, see, they're starting to, they're still kind of vacillating in the after hours. We haven't seen much. This is always my favorite part, right after it comes out. And then you could see the stock kind of vacillate around for a little bit as people try to make heads or tails of what actually happens. I remember back in Intel,
they were the tempest in the teacup.
Yeah, back when I was trading Intel for a living, it was pretty much my primary pit. The gamma scalping around earnings was just was amazing. You can get fills that were nonsensical by any stretch of the imagination, just because people were. I think one day people got the numbers wrong because the stock moved completely in the opposite direction of what it should have done. Then all of a sudden the real numbers came out and then went completely the other way. It's amazing to watch these big names somehow still screw it up every now and then. So yeah, these are fun, heady times. Zynga, of course, and Amazon. We're waiting for both of those. And now, Andrew, you mentioned earlier VIX trending down a bit here. Are you guys starting to position to the downside again in VIX? Or are you still kind of hands off, wait and see like you were last time?
We've had some short VIX here for a while. Actually, the day for me was the day before the Apple earnings, when everybody was just they were all just way too angry. We had a kind of a sell-off. Apple was down. Everybody was moaning and groaning and blah, blah. Apple earnings are not going to make any money. And vol was at VIX. I don't know what the VXX, I think, was around 19 or something like that. So we did add some small short volatility positions because I thought that was all a bunch. One way or another, the news was going to come out and the vol was going to come in. That was my personal opinion, and that's what we did. So I think we're running probably maybe another $1 or so in the cash VIX, but that's about it. I don't see much more. I just have such a hard time with these pesky Europeans continuing to have their hand out in their tin cup for money. It just although now that the rest of the world and not the ECB has to finance the debt, it looks like they found a level. It was about 100 basis points more than they wanted, but where people will actually start buying their debt again as long as they think that they're going to cut spending. And I don't know what's wrong with these countries. 1 year of 1% no growth while they kind of retool and look for other ways to generate money, I think is a good thing. But like my example is the Asian economies after 1998. They borrowed in dollars heavily. They got kind of crushed on the carry trade when their currencies tanked, and they had to stop borrowing money overnight. And literally, 1 year later, they were off to the races again. So at some point, you just have to stop financing growth with crazy debt and go back to figuring out how to make money. And it needs to be done. So I think that overall will be the good thing, but as long as that still lingers, it's hard for the VIX cash to get below 15. I think that's still the sticky point. The only good thing about the VXX and some of those other things is their future base. They're still about $2 a juice in the future, so they could pound that down a little bit extra. They can sap some of that premium out, but it's one of these days where I had client sessions and stuff, and I could not close my longs, which was kind of stunk because I would have liked to realize some profits today.
Those pesky clients and their incessant demands.
Yes, I would have liked to realize some dollars here on this little run up, but I just watched it all not happen because I couldn't hit the sell button fast enough.
Welcome to my world. I'm out of the office too much to sling too much size these days because I'm never around to close it out or lock it in or do all the other fun stuff that I used to be able to do much more actively.
Yeah, not being able to close is tough.
Yeah.
I tell everybody, everybody's like, when do you close? Okay, if you're up some money that you think is a pretty good amount, close it. Don't wait till the little red blinky chart on your trade platform says this is the maximum profit. Okay, you could go broke waiting for the maximum profit in an option trade. Just
that goes back to the old that goes back to the old problem of everyone learning options with expiration P&L graphs, because that's all they know. It's got to go to expiration. That's what it's worth at expiration. So they have to wait for that max profit to occur, and that sometimes comes back to bite them. Speaking of coming back to bite them, I think we're going to dive right into the old option block and see what comes up to bite us in those silly names that we have for today's option block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, a portion of the show where yours truly peers into some of the interesting, unusual activity we've posted up here on the old optionsinsider.com. If you want to learn more about these or any of the other names we're going to discuss today, then by all means, surf on over to theoptionsinsider.com. You can find everything that I'm about to tell you and much more. We're going to kick things off today in the old odd block today. We have a newcomer. I don't believe we've ever discussed this name on the show before. This is Skullcandy Inc., ticker symbol SKUL. You probably know them. You've seen their stuff in the headphone aisle in Best Buy and other electronic stores. They're the boutique headphone manufacturer. They make kind of some of those, I guess you can call them teen-inspired accessories for your electronics. Lots of interestingly decorated headphones and fun stuff like that. And I didn't even realize this was a publicly traded company. I know I've seen them around for years, but I've never actually traded them before. So this is an interesting one for us. They closed today at $15.40. Of course, they are ticker symbol SKUL. And we saw some bulls piling into SKUL today. The stock has been looking pretty good for most of the year. It's up about 40% in the early part of the year, the first 4 months of the year. Hit a high of about 1776 last week. Good year, 1776, by the way. And since then, the stock's off about 12%, trading today about 1540, like I said. Despite that little bit of retracement we've seen in the stock, the bulls are still out in force here in SKUL. A lot of them seem to be piling in ahead of the earnings announcement that's coming up on the 2nd. So next week, we saw a lot of bulls jumping into the May 17 halves. That was in the early part of the session, at least. That was where all of the action was. We saw about 2,800 contracts going up right in the beginning of the day, a total of over 3,000 on the day, with the previous open interest of just 1,300. So a lot of opening paper flocking into the May 17 halves. We had one big block coming in, someone picking up a big block of about 1,750 for 45 cents. So a lot of buyers of upside here, near-term upside here in SKUL ahead of earnings. We also saw this follows on the heels of some additional bullish call buying activity we saw in SKUL yesterday. We saw about 1,000 of the May 15 and 17 halves combined going up yesterday as well. So a lot of opening call paper flocking into SKUL ahead of their earnings next week. So apparently these guys are thinking that the ride is still heading up for this maker of interesting headphones, let's say the least. Very cheap, very interestingly designed headphones. Andrew, let me guess. Andrew, SKUL was one of the names in one of your pits on the SIBO.
You know what? It wasn't.
I don't think they go back that far.
No, I don't think they go back that far either. It's just 4 or 5 years ago. So, yeah, doesn't go back that far. If it's an old name, yes. I don't know. I trade 500 names or something like that. So I guess that's my problem. It's about 1/10 of the outstanding names that trade, or a little bit more than that. 50. I'll tell you what though, 50 cents for the May 17s. I think there'd be guys willing to yell sold on those things.
Yeah, in their defense, it was 45 cents. But yes, I lean on the same side of the fence as you on that one.
Yeah, and I'm looking at earnings here. I mean, okay, they make some money, but I don't know. I think that seems like a pretty decent sale.
Yeah, the tweens have to go somewhere to buy their headphones, Andrew. So
the tween, yeah, what is this, like Snoop Dogg owns this company or something like that?
Yeah, I don't know. I think it's more of like the skater and tween fashion than the hip hop stuff. But man, I don't know. Maybe they make all of the above. I don't know. But you're right. If you sell those for 45, 50 cents, there are a number of opportunities you could spread that against, and I think you could do fairly well with that position.
Yeah, I don't think that's too bad of a position. Even like your ratio 1-to-2 with something else. But yeah, I mean that's given where the range of the stock is. I mean they're actually going to have to make some real money they're going to have to do stuff. Yeah, they're going to have to make some money. $18, $19 is the high. So yeah, I would yell sold now on those and hopefully not get into too much trouble with them. That would be my
spoken like an old school floor trader, sir. But yes, those are the bulls you like to be on the other side of sometimes. Moving on in the old odd block, we're going to dive into Aetna next, ticker symbol AET. They closed at $45.31, down about 8% on the day. Not exactly a good day for Aetna. They had earnings this morning. Obviously, they didn't exactly impress the old street. So this is a name that usually does about 4,000 contracts a day. Of late, they did nearly 31,000 today. Despite this sell-off, we saw some buyers, some front-month call buyers, coming into Aetna this morning, ready to try to scoop on this down move. We saw activity here in the May 44 calls. We saw about 2,000 go up on the day, including about 1,500 of that earlier in the session. The bulk of those being purchased early in the day for around $1.08. So these are already looking pretty good since Aetna has rebounded a bit since those calls were made. So those guys are already looking pretty good. So this is a quick scoop here of some calls. Of course, there was a lot of paper going up in Aetna today. Like I said, they were substantially higher than their ADV. People picking up 2,000 of the May 47 calls. May 46 have nearly 2,000 go up today. Nearly 4,000 of the May 45s, 2,000 of the June 47. So there was a lot, and not all those were buys, of course. There was a lot of mixed paper there, but just a lot of activity across the board and across strikes here in Aetna. So that's just one call buyer in a sea of trading activity post earnings here in Aetna. And then I think we're going to wrap it up with another newcomer to the old odd block. We have Omnicom Group Inc., ticker symbol OMC. Not OMG, as Andrew likes to say all the time, but OMC. And this is the name that does usually about 550 contracts a day. They did nearly 6,000 today, so it was a busy day for OMC. It was a bit of a strange day as well. We saw a lot of interesting paper going up, starting off with about 1,400 of the May 50 calls going up. The bulk of those purchases for around $1.15, and then that number includes about 800 that were bought as part of the May 50 straddle. A lot of straddles going up today in OMC, Andrew, which is interesting. They picked up 800 for prices around between $215 and $225 net. We also saw about 850 of the May 50 puts going up. The bulk of those purchases about 92 and between 87 and 92 cents for about 800 or so of those as well. So lots of straddles, also some naked call buying, just outright call buying of the May 50s as well for $1.15. So a lot of long call love here On the May 50s, we also saw the May 55 calls being picked up for about a dime 300 times today. That has open interest of 1,000 on that strike, so this could be some closing positions that we're seeing here. Rolling out to June, we also saw the June 50 straddle going up about 400 or 450 or so times, being picked up for about $3.25 or so, roughly. And so we saw two straddle buys on the day, and then we saw 1,600 almost of the June 55 calls trading as well, and that was a little bit more mixed. About 1,000 of them were bought, though, in prices ranging from 20 to 25 cents. Looks like a couple hundred were dumped later for 20 cents. Maybe this guy was trying to scratch some of them. He bought too many. But this is another strike with zero open interest here. So this is all opening paper. Of course, if you look out to July, there's a bunch of 1,500 lots in the 50 and 55 strikes and the calls out there as well. So perhaps this guy is putting on something else against that position. It's hard to tell right now without scouring through all of the open interest for the past few months to see when he put on that 50-55 call spread there in July. But today was some interesting paper, concluding two relatively sizable straddle buys and some upside call buying. It was just a premium buying bonanza here in OMC. So, Andrew, which pit of yours was OMC in?
Actually, OMC used to trade in the Sun pit on the PSE. It was a single list for a very, very long time.
Really? This is one of the
Omnicom,
one of the berries they had out on the P Coast, huh?
Exactly. I think it was a 4-letter symbol stock back there in the day too. But it used to trade a little bit. I think I'm just pulling up the old live vol here on this because I have a feeling somebody is trying to buy some. What I'm going to say here is, wow, they are trying to scoop some. This stock is, it's starting to move a little bit more again. It doesn't look like terrible purchases for the straddle, although right now we're definitely trading at basically year highs for the stock. So they're, I think they're okay. Instead of buying the underlying stock, I'm going to buy the straddle and just watch it go. So. I don't think an awful buy as far as premium goes. Definitely a sit and hold. I think the July doubles might have been they're going to be a little rougher.
Yeah,
but
he's stretching a little bit there. I couldn't really tell exactly what he had he had June doubles and he had the July 50-55s. Looks like they both went up 1,500 times sometime over the past few months. I didn't have time to parse out exactly what he did there, if he sold that spread or bought it, or if he bought a two-saw-esque stupid on that as well. This guy just can't buy enough premium, it seems, here in OMC.
Yeah, I mean, it's a very, inexpensive. I know it's a big advertiser and they don't have this, super dynamic growth, but 21 volatility could be a takeover target. I don't know. Definitely trying to buy some big movement there. So, but it's about as cheap as it's been. So I'm not going to say they're not awful purchases by any stretch on some of the stuff you could buy.
Well, at the very least, we gave you something to chat about on the old pit report tomorrow. So something you could walk through with your students and see why the heck this guy is jumping all over every strike here in OMC. It seems like
exactly. Maybe a few too many strikes.
It seemed like there's one player here in OMC, and he's letting up all the strikes today. I wouldn't be surprised if half his open interest out here is him in some way, shape, or form rolling and opening up new positions and doing a lot of interesting stuff. Like I said, this one usually only does about 500 contracts a day, so this is a fairly active one for OMC. And with that, we're going to close out the old odd block for today and dive right into the strategy block.
The strategy block.
And welcome to the old strategy block. This is, of course, the portion of the show where I get to rest my weary vocal cords and I get to toss it to good old Uncle Mike out there in lovely St. Charles, Illinois. And as he teased at the top of the show, Uncle Mike is going to dive into that, for my opinion and for my money, that very under-discussed and under-followed name, Apple. Uncle Mike, by all means, tell us tell us how your earnings week unfolded and what horrors you were put through as you tried to manage those positions.
It was something else. I mean, for today's strategy block, I want to just kind of go through just different ways of looking at things, and that hedging a stock, there's a lot more to it than just simply buying puts and forgetting about it. With it, what we did going into it, there was a couple times that we had been, I believe we had actually scalped a couple of bear put spreads, and with that, nothing too major in that. We just kind of got in, got out, made a couple points on it as it was going down. The whole time we had like our catastrophic put in that I think we had at the 495 level, but either we were expecting that one to go out worthless no matter what. But anyway, going into last Friday, Apple had earnings on Tuesday. So last Friday, what we decided to hedge with, instead of just buying a put, we actually hedged with a ratio put back spread. And with it, that's kind of a little bit on the risky side because of the fact with vol as high as it is, it's typically not our way of doing things, but we had short premium at the 605 level for May on the covered call. And so we felt that it was justifiable in what we were doing. So the position that we were in, we actually bought, we'll just say for every 100 shares, we bought 2 weekly 560 puts, and sold 1.
I was about to say, wow, you're really getting bearish or bullish on Apple. You're doubling down on the 560s. Let's just add a few more of those to the old portfolio. We don't have enough upside here in Apple right now.
Yeah, we need to, with all of our shares in it, we need to buy some more calls. 570 is what we originally started with. So we were long 2 570 puts, and then short 1 605 put, and this was going into the weekend with Apple around the 573 level or something along those lines. And we got in for a debit of like 50 cents, I believe. So with that, I want to kind of give you guys an idea of how you really have to trade delta neutral positions. Oftentimes, and we've talked about this on this show a lot, just do a straddle. You can make money in any market. It's that easy. Well, a ratio put back spread is kind of like a straddle, and that if you look at a risk reward graph, it's like a straddle with limited upside. But point behind this is that we wanted to make sure that I was willing to take the bet that Apple was not going to sit still. And that's the gamble that I took by hedging that way instead of just buying a put at like the 530 level or something like that. So if Apple would have stayed at the same level, if Apple would have stayed at 570, that's where I would have been a losing trader and it wouldn't have been too good. Monday, Apple goes down to around the low 560s. So with that, sold the 570 puts for a profit and then bought 560 puts. Once again, we're at the weekly level. So when you do that, whenever you're trading a straddle, you have to do things like that because of the fact that going into earnings, I wanted my puts to be right at where the close was on Tuesday going into the earnings. So I had to kind of follow it around a little bit. Apple did eventually go up to the 570 level a couple times, and I was actually getting ready to roll a few times. And then as I'm getting ready to roll it, it came back down again. So I'm basically sitting there with my hand on my mouse pad, getting ready to do some rolling, but I never did. So I was going to roll back up on it. And it would have been a very similar roll to the way up because of the fact that the extra day gave us a little bit of time decay in it to make it so that we actually would have still been at a profit from the original roll by a few pennies technically, but prefer not to do that if I can help it. But nonetheless, I was ready to. So anyway, going into the earnings announcement, Apple closed right at like 561 or so. It was very close to 560. It was right where I wanted it to be. And so as everyone knows, Apple reported earnings and things went well for it. And then the next morning, Apple was up at the 610 level. So what happened with that trade in and of itself? Well, with that, those 2 puts at the 560 level, and keep in mind it was much more than 2, but just for 2 puts for every 100 shares of the stock that we owned, they're at, I don't know, like maybe 5-8 cents, something like that right now. But where this trade actually became profitable is when I rolled down from the 570 to the 560 puts, I took in a credit of just under $6. So that made the actual overall credit on the ratio put spread itself about $5. Apple goes up, and I actually was able to get out of those short puts for probably about just under a $5 debit. So we actually ended up making money on something that was intended to hedge us, and it actually went up. So with that, it's one thing where I prefer not to do things that way. But when you have something like Apple, it's gone down so much, I didn't want to be bearish on it and buy a bunch of puts, but I didn't want to throw caution to the wind either. It's one of those ones where you have to walk the fine line. And if you are going to do a ratio back spread in a higher volatility environment like this, you have to be on it right away. And whenever you're doing something like that, be careful and make sure that you understand the risk inside and out. So with that in mind, that is what I did. And if you are going to do a trade like that, once again, don't plan on going to the bathroom.
Yeah, that's one of those trades, the type of trade we discuss on this show quite a bit, and we often make this point that you're exactly right. If you are going to do that kind of thing, you can't just set it and forget it, as they like to say in all those infomercials. You really need to be glued to your screens, and that's the type of scenario where it would pay to have someone like you, Uncle Mike, managing it for them, because I think most people are busy living their lives and doing their jobs and don't have time to really to roll their put back spreads down. And that's exactly the point you had there, where that's the moment where that trade became profitable both on the hedge and on the underlying itself. And that's the kind of thing you have to be on it to really capture. We say all the time on the show, do something with your hedge. Don't just let it sit there. I think the vast majority of people would have come in and done exactly the opposite of what you did, which is just load up on a bunch of downside and then been happy that the stock took off in the other direction. They didn't have to use their puts, and they would have spent a ton of pre-earnings premium to do that. And it's not exactly a bad trade to do that either, but it's not ideal. And so certainly if you have the time and a little bit of wherewithal and you can manage it correctly, then that's certainly the way to go. As Andrew likes to say, do stuff. Do stuff. And listeners,
Gotta do stuff.
Listeners, I wish you could see our Skype chat right now, because it is just full of Andrew writing do stuff.
You have to do stuff. When you are back spread, Mr. Tusaw with Trading 101. Nicely done. You have to do stuff.
Yeah, I don't like
your
doing
profits
stuff.
Go away. Well, I know you got the bathroom index. You got the BBI, you want to go this, but when you're forced to, I'm glad to see they could chain you to the desk and make you roll your puts.
We will do it. That's what it takes. I prefer to do things a little more relaxed, but it's one where Apple is kind of the exception to the style of stock and ETF that we're in. So when in Rome, you got to do those things.
Yes, you will be chained to the desk like a slave in a Roman galley, and you will roll your puts when necessary.
Roll your puts gently up the vol. Hedge with gamma, and you will see.
Uncle Mike had his
Results that make you smile.
There you go.
There you go. Exactly. Uncle Mike had his big week for the quarter, and now he can relax. And
he's done. He's sleeping on his desk.
He can bump up the BBI until Apple reports again next quarter. And
puts on, call sold, Apple go up.
Exactly.
Done.
Exactly.
Clients get 20% return per quarter. Life is great.
All right. All right. Thank you for that bit of wit and wisdom, good old Uncle Mike. And now we're going to close out the strategy block for this week and dive right into Around the Block.
Around the Block.
All right, and those cars whizzing past means it's time yet again for the old Around the Block segment. This is, of course, where we look at what are we looking at for the next few sessions. And, of course, we didn't have a chance to touch on them again earlier, so we're going to do a final earnings roundup here. And looks like Amazon off to the races. They closed at 196. They're trading 221 roughly in the after hours right now. If you were one of these weekly premium sellers there on the 195 strike, you sold that straddle for about $14, maybe close to $15. This thing is off 25 handles right now, so that trade not looking too spectacular right now. And as for the other good old Mr. Andrews' other favorite doing stuff candidates, Zynga, this is the exact opposite. This was like one where you could have sold premium all day and it could have looked pretty good I'm assuming the numbers are out. This thing is almost unched exactly, unless they're really holding on to their numbers for dear life. I don't know. I have to.
That is torched.
I have to assume they're out by now. Yeah, and this thing is closed at 9:42. It's trading 9:40 at 9:42 in the after hours right now. So that's one of the best premium sales we've seen in a long time here. This is like Microsoft back in the old days. A resounding meh.
Teapot.
Yeah, exactly. A resounding meh. People. It's like people were lighting up some of these. Well, those are not downside anymore. They're lighting up some at the money puts here in the weeklies. So that trade looks like it paid off for them. Saw about 13,000 May 8 puts going up today in Zynga. I'm guessing the bulk of those were not purchases, given the way Zynga has traded in the past. So looks like people fared fairly well on this announcement, at least so far, unless there's some surprises, some other shoe yet to drop. And speaking of things yet to come, we have Ford, Uncle Mike's other big holding. So I joked he can't rest just yet. You have one more mile to go before you can sleep, Uncle Mike. And that is, of course, Ford earnings before the bell tomorrow. Ford closed at $11.87 today. It's been rallying a bit. It was testing that 11 handle earlier in the week. Now it's pushing up to the upside again. So we'll see what Ford has in store. I've never been a fan of before the bell earnings. I think it just should be mandatory after the bell. Who wants to get up that early to deal with the earnings, you know?
It's not as much fun.
Particularly, you were a Pecos guy. That must have been atrocious.
Yeah, I know. Yeah, that's no fun. Everything should be after the bell. I liked it after the bell, and they should all be on expiration day to really put some jazz into the option.
Jack up that premium.
I'm looking at Ford weeklies here today, and about 21.
Yeah, there was some decent premium at the 12 level.
Yeah. I was eyeballing that myself today. I still have some residual holdings here in Ford, and I was looking at what to do with them going into earnings, and I was being lured to that 12 level as well. I ended up, like Andrew said, just becoming busy and not having a chance to actually follow through on the trade and do stuff. Yesterday, I actually had some time to do some stuff in Zynga, and that was fun. But today, I was not able to pull the trigger on Ford. That's the downside of having a couple of growing and successful businesses, is that you're stuck doing business and not doing stuff on the screens like you might want to. So it's not a bad problem to have. It's just a different type of problem to have.
Problem.
I might have to hire Uncle Mike to manage my Ford and my Zynga for me. How about that, Uncle Mike?
I have to say, though, the technology stocks, is there one stock really in technology that has not outperformed? We kind of have this closet thing where stock-wise, the equity markets, companies in the U.S. are making pretty good money, and if it weren't for those pesky Europeans ruining everybody's day, I think we would be off to the races. I thought that a month ago, but Europe squashed that, and all of the lovely premium I had bought into it, which I still own because I bought it way out there. But, these, for the most part, names are kind of taken off here on some of this stuff.
Well, I'd be remiss if I also didn't mention that good old Eastman Kodak floating around the old peak sheets had earnings today too. Sometimes they say time unknown here, which is never a good sign from an earnings perspective. So this
doesn't
one
matter.
Trading 28 cents. This was a fun odd block candidate for a while last year, but now the shine has come off. Good old EKD. I'm sorry, it's not even EK anymore. It's EKDKQ. Say that one 5 times fast, and not exactly a lot of paper lighting up the old tape here in EKDKQ. What else are you guys watching around the block here?
Ford's pretty much where my main focus is right now. My focus, Ford focus.
That was a Freudian slip, sir. So I imagine you have essentially a lot of underlying and covered calls going into the earnings tomorrow?
I'm actually open right now. We were short the 12 puts along with some underlying going into last week's expiration. So I let it get put to us. And I was tempted by the 12 covered calls, but I decided not to. I am hoping that Ford is at $14 tomorrow.
Yeah, I had the same hesitancy when I was looking at it. Ford doesn't gap that much, but I had the same.
It will tomorrow. Come on.
You left it open, so of course it's going to plummet to the downside tomorrow. Of course.
Right.
Thanks for that, Uncle Mike. You just killed all my Ford.
For Mike's sake, I hope it just really rips.
It's going to go to 18.
Let's see. What's a good
20.
trade there? I'm trying to look for a good. Okay, what's a good trade in here? 11, 12. 11. How about the May 11, 12? It's not going to be great.
Yeah, I didn't find anything that was sticking out.
Yeah, aside from those 12s, there wasn't much that really caught my eye out here either. I was looking at maybe some risk reversals, put on some additional bullish exposure or ratios, or even just put on some covered calls. Like I said, I don't do much in the way of underlying, and I mocked you for having underlying last week, Andrew, but I do have some floating around here in Ford. They're like you, Uncle Mike, remnants of downside puts that I just couldn't let go. The levels were just too attractive to pick up 4 of those levels, and I've been writing covered calls on it ever since, and I've yet to have it taken away from me. I've been trying. So
please take my
my underlying. Stop rallying so hard on me. But and I was tempted by the 12 handle as well today, and I just couldn't pull the trigger. A, I was busy, and B, I just wasn't too infatuated with getting rid of my Ford for 1230, 1240. That's not exactly.
Don't they make a car that you can plug in? Do they have a plug-in car?
Yeah, they have a couple now. Don't they have I think they have multiple. They have hybrids. They have plug-ins. I forgot.
What's weird? Even in Maine, I'm starting to see them. Like, people are like, well, you know what? I'm seeing more and more and more of them. People are going to start plugging their cars in, man.
Even in the hinterlands, they have plug-in cars.
Yep. Yeah, I'm still even with this other rally. I'm a little bummed out. I had I'm long a few things. First Solar is something I have on my list as a stock going to zero. So we have some time spreads that we're going to have to roll tomorrow. We've been buying out-of-money put time spreads and trying to take advantage of that juicy weekly premium, and it's been working okay. I might be the end of the ball tomorrow. I'm not quite sure yet. And, we have some short premium around. I don't have a ton short. I just have some short, and that's basically, what I've got, actually. And I've been looking for some. I've started buying a little bit of juice in a couple things and have some legacy stuff, but nothing big really either way, because I think the market, nothing big either way, basically that, just being opportunistic.
All right, thank you for that, Andrew, and that is going to do it for our Around the Block segment. It's also going to do it for this episode of the Old Option Block. I, of course, want to thank my cohorts, my partners in crime, for joining me on the show today. Starting off with you, Uncle Mike Tusaw, what is coming up in the land of KYO that may interest and or intrigue our listening audience?
Well, as with anything, we have our In the Know weekly newsletter. Taking a little bit of time off from webinars for now, but we will get the webinars going again shortly. The Apple webinar that we had about a week ago was a great success, and just want to make sure that we continue to educate the masses as best we can. So continue to check out our website at knowyouroptionsinc.com.
And don't forget to hit up good old Uncle Mike at No Options there on Twitter and let him answer your ratio put backspread management questions, 140 characters at a time.
I'll see you guys later.
That's a good challenge. All right. Have a good one, Uncle Mike. And Mr. Lobster, a.k.a. Mr. Andrew of Option Pit fame. What is coming up over in the land of the pit? My little birdies have been telling me that your extravaganza is rapidly approaching.
So our June extravaganza is approaching. There's a few slots left, which is good. But if anybody's interested, we will try to make room for you. But definitely got a couple slots left, but it's been going well. And, of course, we have our weekly webinars, webinars on the weeklies. We have another one in May and another one in June, and they're each progressively, we'll just call them more complex as you roll. But those are our big doings. We will have some announcements soon again, top secret until things are done, but some exciting stuff coming from the old option pit as we grow and grow and grow in an exponential fashion.
Let me guess, you're rebranding Option Pit as Mad Money Options. We're going to have Kramer guesting on the show. Option Lobster. I would pay money to subscribe to an Option Lobster service or newsletter, whatever the case may be. Whatever it would be, I would support it.
Right. I think that's I might have to Twitterize that handle.
I'm telling you, you have the clock is ticking, sir. This goes out tomorrow morning, so you have about 10 hours before
I lock it up.
Before someone else locks it up. So grab Option Lobster and optionlobster.com, and may God go with you, sir. Speaking of going with us, of course, that is going to do it for this episode of the Option Block. And before we go, we do want to thank all of you out there for downloading and streaming and subscribing to the program and making it such a success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.